a trade I took using standard deviation. So you could see we had this massive sell-off during the PM session. As soon as the PM session opened, we had this massive dump and it went down to just above 0.5. And you can see that once it got back above 0, which means that we are now green for the day on ES, I took a trade with a small stop loss. Now, my reason for this is because if you look at the candle previous to this, right here, this has no top wick. So therefore, buy side has not been offered to the market when this candle opened. This candle opened at exactly 1 o'clock. So the fact that this is a 1 hour candle with no top wick tells me that we have to go back up there. This is most common on hourly candles and 15 minutes. If you see that, the market is probably going to try and revisit that area. And you can see here the stop loss that I used, a couple of £100, and at this point now the market is moved far from my entry. I got in slightly later than I would have wanted it to take the trade exactly at this bounce right here, but I got in a bit later, but it doesn't matter. Stop loss is now just below my entry. If it comes down towards that now, it's probably going to go through and go the opposite way. So you can see here $65. I've moved this now to $7.15 if I wanted to lock in profits. Now I only use a mental stop loss. I don't ever bring my stop loss up to take profit halfway through the move. I trust the move, so my stop loss will always remain probably below that STD level. But this is something that you can do as a beginner. Okay, you can move your stop loss up, maybe say up to the 10-point mark, and take your position there just to make sure that you secure profits. Good thing to do though is make sure you come back and review to see if that trade actually got to your target. But eventually have faith in the system, it will get to the target. Now you can see here this is wicked, right? So I move my stop loss back below the 0 point, or at the 0 point. The reason being I didn't want this to come down to the 5-day MA, hit my stop loss, collect the money, and then continue on its way. But you can see that this fair value gap isn't creating such a large reaction. Now, if this fair value gap was going to tap and come all the way down, again, the reaction would have been in the first quarter of that fair value gap. So it would have been around this area. The fact that we've tapped 50% and we're still pushing up makes me think that we are most likely to go through this fair value gap. And my target is here. Again, why is that my target? Because there is no top wick on that candle. This is the 1 hour, 1 o'clock candle, and there is no top wick at this point. So the market has to go up there and offer buy side to the top of that candle. And we will see what happens here. Now, just for transparency, I did not take this trade. I did this recording to show you how to use STD, how you can use the no wick candle strategy as well when you're taking a trade. That can be another extra reason for you to get in. And by this point, I had already made the money that I had targeted for the day. So this was just a paper trade. Full transparency is just to highlight the trading strategy and how it works. And you can see that bounce at 0 right there would have been a beautiful entry. As soon as it tapped that, if you'd entered, you could have had a $65 stop loss, and it would never have come near that. There's me highlighting that candle right there. Hardly any top wick. And there you have it.